Greetings, members, one and all of the Salivation Nation. Gold and silver spike after inflation soars. Let's explore. Yes, indeed, we are seeing some of the latest data come through, and it is having a reaction on the dollar as well as for gold, as we are starting to see inflation now rise to a 40-year high. And we're going to be referencing here an article from Reuters that talks about this. Pretty interesting to see indeed, and it should give us some more confidence that we are doing the right thing when we hold silver and gold. So gold has firmed up on Wednesday as data showing the U.S. inflation was within the expectations dented the dollar and prompted buying from investors who seem to have priced in the Federal Reserve's likely interest rate hike trajectory. Some say they may actually raise rates 4 times this year. We'll see. Spot gold is up and is extending gains after rising the most since mid-December on Tuesday, and the dollar index fell to a 2-month low after data showed U.S. inflation posted its largest annual rise in 40 years, making gold more attractive for overseas investors. The U.S. benchmark 10-year yields also slipped. Standard Charter analyst Suki Cooper said gold prices have held up remarkably well, even as the market continues to look for the first Fed rate hike in March. And that's something I can't impress upon my viewers enough. You think about it, we've been somewhat spoiled in a sense of high-priced gold when we saw it spike to all-time highs in August of 2020. And that means that gold really, in a sense, is kind of consolidating from that time period. But it certainly is up high, and I think in a sense, gold being the more stable asset, it's something to consider when you're thinking about prices. You know, I mean, look at it before the pandemic. It's crazy. Silver, on the other hand, certainly is still much lower than many people think it should be, but it is still higher than where the pandemic was. It's not keeping up with inflation, though, and that is something that I think could change this year, especially as we start to see it becoming more and more of a reality, and maybe we'll see the markets react to it. But let's continue here. Historically, gold has tended to price in rate hikes early. Price action suggests that the market has priced in rate hike headwinds and the scope for near-term USD strength, according to Suki Cooper. While gold is considered a hedge against soaring inflation, a resultant hike in interest rate translates into increased opportunity cost of holding non-interest bearing bullion. So you can have the push and pull, you know, baking in interest rate hikes as opposed to what's happening now and the market's reacting to inflation. So when the rate hikes come, we could see gold and silver pull back, at least at the beginning. But it may not last long. In fact, it may have a boomerang type effect and come back to bite us or bite them, and gold and silver rise, meaning that the gold and silver that you hold will certainly be more valuable, and you will be glad you bought them, for sure. Building inflationary pressures are likely to keep gold supported in the coming weeks, pushing it above technical resistance around $1,830, according to David Meager, the director of metals trading at High Ridge Futures. In fact, when we look at the prices right now, as I record this video today, gold is up marginally, only a 1/4 percentage point, but it is still getting close to that 1830 level. It's at 1827, $1,827.30 to be exact. Silver, though, is up almost 40 cents, a 1.69% increase to $23.26. So it is now above $23 again. That has narrowed the gold to silver ratio down fairly substantially. It has now went from over 80 to now 78.86, so over a point there. And so it is interesting to see the movement here in gold and silver prices because of today's news. 7% inflation we are at right now, and that means that for over year, goods and services, according to the CPI, are up 7% year over year. Crazy. Capping gold's advance were gains on Wall Street as the inflation figures have eased some concerns about faster than expected interest rate hikes. Gold seems like it is in a good place as Treasury yields won't be rallying much higher until financial markets have balance sheet runoff certainty, and that won't happen until at least a couple more Fed meetings, Edward Moya, senior market analyst at brokerage Oanda, said in a note. And we did see silver up, and I think that is something very interesting to see when we got inflation 7%. And now they say that it is kind of in line with expectations, but gold and silver are starting to react, and this could be the beginning of the end of lower silver prices and maybe even a return to somewhat record high gold prices. We'll see. It's all going to come down to that March meeting where they raise rates. How much will they raise them? I think if they raise them more than a quarter point, we may see a bigger drop for gold and silver, and we may not see that much of a drop for gold and silver when they do raise those rates, even if it's a quarter point. So I think we're going to have some support here, folks. I believe this is good news, and many people feel like it's about time, but in reality, it would probably be a bit early, considering that these inflationary pressures really we started to see last year into this year. And sometimes it takes a year or two in order for it to really reflect. In fact, maybe even 3 years to really we see the breakout for gold and silver prices in any given direction. Although, in a sense, we kind of already saw it with gold. Gold broke out to its all-time high in August of 2020. And so we're comparing everything to that. That's why gold has been down. Silver has a long way to go to get to its all-time high. But we could see it spring forward on the coattails of gold in a big way this year, or maybe next year. It's really difficult to say. Supply chain issues are still a concern, and obviously the Omicron variant is another concern that the market is contending with again. And it's something that, talking about the market's reaction to what the news cycle is, whether or not you agree with whatever it is, one cannot deny what the markets are reacting to. And we know that what does the Consumer Price Index do? It measures it based off of these certain entities, but what's stripped out of it is a more volatile food and energy cost. And so when you see that 0.6% increase, does not take into account food and energy, and which are very important, obviously, to those of us who use food and energy. All of us do. So those are even an increased area. And we also are not seeing wages catch up to what's going on with inflation. It's not meeting. It's not even anywhere close. So there you have it. Very interesting numbers today. It's going to be very interesting to see how this plays out in the end here as we get further into the year. Could 2022 be the breakout year for silver and a recapturing of the crown of the highest gold price in the history of the markets? We shall see. Going to be very fascinating to see where that goes. But this is one reason why I accumulate gold, especially gold, because it tends to not be as erratic as silver in the price movement. And really, we are consolidating from its all-time high in August of 2020, and we are still in the high 18 or the high almost into the moving into 1830 and 1850, which is not that far away from its all-time high. Silver is a more volatile metal, but there is some room for movement in the upwards direction for silver. And I think it could happen. And it may, if it doesn't happen this year, we could see it happen next year. Because you think about it, even if we see the prices or the consumer price index move back to normal, which is about 2 to 2.5%, that's based off of year over year. That's a move back, but it's still the 7% cannot be taken away. In other words, goods and services will only rise 2% over the previous year, and the previous year we started to see inflation start to rear its ugly head at that point in time. So we're still dealing with high prices, and there's no escaping it. There's no escaping inflation, and we know now that it's not transitory. But when the Fed says, it's gonna subside this year, they don't really know. They really don't know. And my guess is, given that they predicted transitory inflation, for them to say that it's going to scale back this year is essentially them saying it's transitory in a different way. So there you have it. So let me know what your thoughts are now. Gold and silver have spiked. I hope you found this video insightful. And let me know in the comment section below. I'd like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.